G'day there traders and friends right around the world. I hope you're doing very well on this fine weekend. Here I am on a Sunday afternoon giving you an updated look on what to expect for the markets as we transition into trading beginning Monday the 2nd of March 2015. Before I step into the technical picture, first of all, I want to recap on some additional information which I gave students participating in that weekend Pivot Point Pro analysis workshop. Today's or this weekend's class, went for 70 minutes, and I touched on the fact that a lot of economic data at the moment has been, somewhat underwhelming. In other words, they haven't hit estimates, they haven't hit expectations, and I just wanted to bring up the article which I read, which jinked my memory into bringing this up in the Pivot Point Pro recording. Here's a quick look at an article. Generally, I do read some articles on Zero Hedge, and the article is titled US Macro Collapses to 11th Month Lows. 88% of data has missed in February, so it paints a pretty dim outlook on the markets moving forward. I find this interesting because although 88% of the economic data coming out has missed the expectations, the market still continues to shrug this economic data off, and it is persistently and continuously grinding its way to the upside. Yes, we did see, somewhat of a pullback on the Dow Jones Industrial Average, the S&P, and the Nasdaq on Friday's trading session. But in the context of, the economic data which was released, and what I mean by that is, of course, the revised GDP, the fourth quarter GDP figure being revised from 2.6% down to 2.18 or rounded up to 2.2%, the markets have generally, at this point in time, have shrugged off such alarming data. You can see on the Dow Jones Industrial Average, we were down 81 points. Now, again, in the context of the broader market, that is minuscule. It is nothing. There is no technical damage whatsoever, in the landscape of this chart to warrant, a continued downside type of price action moving into the upcoming trading week. You can see here the exponential moving averages have given us a nice bullish cross. Price is holding above these exponential moving averages, and we're setting up a series of continued higher swing lows and higher swing highs. This is the beginning of a bullish trend. Everything is looking very, very nice, and what we expect it to in the event that the market wants to continue higher. When I look at the past 3 days type of candles, it looks straight away to be setting up what we call a bull flag, which is going to resolve itself to the upside. So put in a different perspective, or worded differently, this market remains healthy, and you need to treat it as such as long as we continue to remain above this very, very, very important macro pivot point. Now, what I mean by that is this has acted, as resistance since November 2014. We hit it once, we hit it twice, we've hit it 3 times, we've hit it 4 times, 5 times, and now we've broken above it. We're starting to retest it, but as support. So we need to make sure that, firstly, you are aligned in the bullish perspective of the overall market. Yes, we could see somewhat of a pullback over the coming days, but do not read too much into the news stories, the media stories, the economic data which they are going to reference. As long as this market holds above the pivot points, not only on the Dow Jones Industrial Average, but also on the S&P 500 right here, holds above the 10, holds above the 20, holds above the macro support levels, you have to treat these markets as continuously and remaining bullish further into March 2015. It is as simple as that. One of the best gauges that we have as technical analysts is sentiment. Now, again, going back to this data point, you can see here the misses, 88% of misses, but again, the market wants to shrug this data off, and as long as we continue, shrugging off bad economic data, it's really the telltale signal that we are in the midst of a bull market. It is as simple as that, As long as we continue to shrug off bad economic misses, and they are bad economic misses, there's no two ways about it, the market can still remain bullish. So please do not be intimidated by such data. Do not be put off by such data if you're looking to place a stake in long trades. Of course, the individual trade analysis has to agree with the market. Now, just because the market is in agreement, it's moving higher, doesn't mean you go out and buy stock or buy calls on any of these stocks first thing Monday morning. You need additional confirmation. You need to wait For the highs to break, you need to wait for the trade setups to confirm, which of course are going to confirm in the bullish agreement of the underlying trend. So what I can do is, first of all, go into some additional stocks which we look at. In this pro analysis class, we follow Apple. We follow Amazon. We give trade setups on Baba, Baidu, Caterpillar, FAS, Facebook. I mean, all of these stocks, Google, GoPro, Halliburton, Netflix, Tesla, and Twitter. Very proud of the recording which I have just put out. A lot of trade setups, a lot of Bollinger Band squeezes on on 3 of our top 13 individual trades. The overwhelming majority of these trades are still up to the upside or continuing in the bullish trend. We are mindful of somewhat of a pullback, all right, in some of these stocks. That is 100% entirely plausible. But until these 3 markets start to break below our perspective boxes, they start to break down below those macro pivot points of resistance turn support, you need to remain bullish on these markets. Keep the fear at the door. Follow the charts. The charts are what are going to lead you to success in the world of trading, in the way of setting up profitable trade setups. And again, looking for confirmation in the way of price moving above or below the triggers we put on our top 13 individual trade list. If you want to learn more, if you want to learn how to trade these top 13 stocks, get a very good understanding of what to expect from these stocks, looking forward into the future, all right? Looking forward into the trading week, for instance, beginning Monday, the 2nd of March 2015, send me an email, get involved in the Pivot Point Pro analysis class, because education is vital whenever you're looking to trade the market, or if you're learning how to trade the market, or if you're still trying to take the initial baby steps into continued growth and into profitable trading. It's really one of the best resources which I know, which is out there and available to people who are willing to learn and how to set themselves up again to trade the markets as a technical trader, not trading off all of this news and bad economic sentiment or data reports which are coming out, which are of course trying to lead people into placing bearish trades, which could be very, very negative and diminishing for your overall capital account and trading account. If you follow such advice, you need some additional confirmations in the way of the technical picture. So that's my weekend market update. Remain bullish on the overall markets until we are proven wrong. That level is coming in at these macro support levels, which continue to hold this market. Also pay attention to the exponential moving averages. Most importantly, pay attention to that 20 exponential moving average. If you go back as a homework task and you go back and refresh yourself with where are the levels which a market pulls back into once it breaks historic highs, you'll soon come to the conclusion that it is the 20 exponential moving average. As long as price remains and holds above that 20 exponential moving average, again, the same is true. I hope I've made myself very clear in this weekend market update as we transition to trading. If you want to learn again how to set these trades up, if you want to see how we do it in these top 13 stocks, have a look into Pivot Point Pro. It'd be probably the best thing which you do in the world of trading education. You have my word for it. All the best traders around the world, have a pleasant finish to your weekend, no matter what you are doing and no matter where you are located around the world. I'm looking forward to what trading will bring us this upcoming week. All the best. Goodbye.